Hi guys, just Ryan here doing a recap for today for the S&P 500, and I'll quickly touch base on crude oil as well. Just going to bring over the daily TPOs here, as this is my middle right hand screen. This has got the good information on. So anyway, I'm going to show you what I was looking at with the S&P today. Quickly going to start with the daily. So you can see here we've clearly got this trading range that we've been in since the retracement off of the highs, and we found support into the 100 exponential moving average, and we're currently trying to reject last quarter's value area, and we're sort of coming back into value here. So if we continue to see rotations back into last quarter's value, then obviously we're most likely going to see a destination trade pretty much back up to 1972s possibly, if we can continue to hold these lower levels and the 100 exponential moving average. We'll have to see how things pan out here. I mean, this is obviously the trading range that we're currently in, so that would suggest that we reject this quarter's value and continue to migrate back into last quarter's. So we reject this quarter's developing value and we continue to migrate further into last quarter's value area. So just interesting to see what happens here. I mean, on the monthly, we're still sort of looking two-way trade, but you can see that there's a slight imbalance starting to happen here. I mean, today I was looking to try target possibly the 1920 with on the short side, but we just never made it down there today. So I'm just going to quickly run through what I did today on the S&P and what I was looking at. So obviously into the open, we opened at the high of this bracket. We see the gap ups. We had an open gap from Monday to Friday. So Monday's trade yesterday, we opened gap up like I said, and we just see that balancing higher, and we opened just below the balance. So in this sort of scenario, I mean, if we open a lot further gap down, then we can look for obviously reversion back to that previous day's balance and value. But when we opened so close, we just opened just below that day. So I looked for a rejection of the previous day. I mean, it was quite a tight consolidated range, so the idea was just to sell it back into range. I mean, if you're sort of a swing trader, I suppose you could be establishing a swing trade back down to 1907s here, if that was the gameplay that you're looking for. But obviously from an intraday perspective, this is what I was looking for. The only big hold up here today was the fact that we opened above the 5 exponential moving average now, and you can see the trend starting to change here. So if we continue to obviously try and trade higher, and we keep trading above the 5 exponential moving average, then this is going to become support below us, and then we will see prices push higher back into last quarter's value, and we will reject this lower balance that we've seen in this range. So, but obviously today, like I said, for an intraday perspective, I was looking to try to sell it out back into the previous range. There are some levels I'm going to go through that I was looking at for targets, but just quickly run through my trade location and how I tackled the market today. So as you can see, we opened up below the previous day's range, and we see responsive buying back into the previous day's value. I mean, this is where value was established yesterday, Monday, and you can clearly see a Vwap here into this 1936 and a quarter. We have like a double distribution on the volume, so there's a clear distribution here, and there's a very low volume node here, and you can see a very clear point of control here. So from our perspective, when the market gets sucked back up into value, we want to see rejection of value if we're trying to lean to the short side, and we don't want to see the market trade through this 1936 and a quarter level. So that lined up with a couple of higher time frame references. I mean, we had this the weekly, so we see a pullback to the weekly developing value area high, and then we see responsive selling. Sorry, this is the pullback. We had the pullback to this week's mean. Sorry, I had to double check that. And so we see the pullback to this week's mean, and you can see it's two-way trade rotational. And off of the open on Monday, I mean, we see this sort of blast up, rejecting this previous week's range, so a value. So from this is like a bullish. This is a bullish Vwap structure, and you can see here that there were buyers responsive off of last week's value area high here. So if we continue to reject value area high, then obviously again the hypothesis will work out to the buy side. So there was obviously, that was some confluence, and the fact also that we were still looking rotational on the monthly. I mean, there is a slight imbalance starting, like I said. I mean, we're starting to reject value here, so if we keep trading higher, there's going to see the value pulled higher, and we're going to see a potential imbalance to test last month's value where we could find longer term sellers. We'll have to see what happens here. But obviously, from an intraday perspective, the idea is to sell this back to the mean, and until we see an imbalance really start to happen here. So obviously, off of the open, we had these references here to sort of deal with, sending it back into this month's value. We came in and we started to see sellers responsive back down, but obviously we just couldn't hold it, and into the close we popped back up. But again, I'm just going to quickly run through what I was looking at off of the open here. So obviously we see this pullback to the previous value. We had our point of control reference here, and you can clearly see on the Globex developing value here, we see responsive buyers back into that trade location, and we basically see a pullback to the developing value area high on the day. So this is where I started to look for to sell the market back down into this previous day's range. So I started to get short on this first test, and I managed to get some scale outs. We popped back up and managed to get some more sort of adds to this as it came down. Obviously the risk is always above the 36.25, so I will continue to add to this in the correct context until this is broken, and obviously I'll get my stop filled. I'll continue to pressure this to the sell side and get multiple scales out and adds, especially in the S&P 500. So obviously, like I said, I faded this first time, managed to get some scale, popped back up, I reloaded, scaled again, we popped back up. You guessed it, just started to add again, and then finally we see this push down. So already I'd established a good core position. I mean, I took some profits, so even if the market had popped up and stopped me out, I still would have had a profit on the trade from the way that I managed this position. Obviously this is very advanced, and I wouldn't suggest doing this until you're very confident with your trading and your knowledge around what we do here at the Private Banker. But so from a non-advanced perspective, you basically just want to get in, you want to get scaled, and you just want to let your runner run and manage your runner correctly. So as soon as the market becomes imbalanced, you're just basically looking to target whatever area you're looking to target, and as soon as we see two-way trade come back into the market, you should have exited your core position, and that should have been that trade done for you. There's no reason to take an advanced approach here and try scale in, scale out multiple times, when because you'll just basically dig yourself a hole in the wrong market conditions, and you'll get hurt more than you do good. So until you're very confident with trading like that, then I would advise just taking that single position, just getting scaled and trying to manage the runner correctly. And obviously once you get very good at that, then you can start doing the advanced trading. So again, so my core position, establish a good core position here. We finally see this the responsive sellers, and we see the market come down and test the 5 EMA. So we sold right down into the 5 EMA. So the 5 EMA started to hold a support here. We did look like we were going to flatten out and possibly break through this. So I continued to maybe to try pressure this market down with a pullback here back to the developing value area low on the Globex, and we basically see this nice spike down, but we just couldn't push any further here. So as soon as we see this pop back up, I got stopped out on my core position above 1932. Obviously I still had multiple scales out, so I've done very well on this trade anyway, but as soon as two-way trade come back into the market, I just exit that position. And then I'll just wait to see what happened, and we just see this pullback to to yesterday's lows, and you can basically see the accumulation and sellers basically capping buyers here. So I established another short position from because we'd already rejected that previous value area, so we see the pullback to the value area and to the Globex mean, and I basically just established another short position here. And what I was trying to do is I was trying to target last week's point of control into 22s. Let me just stretch this back out. So this is a 5-day composite. So I was trying to target, as I said here, I was sold here, and I was trying to target the 1922s with a break through the 5 exponential moving average, or at least a pop through the 5 exponential moving average, just to see if we could flush through it and find some sellers. But this just couldn't happen, and what I basically just ended up getting everything out, like I suggested on the forum, into that previous day's Globex low here. We didn't test it, but I mean, from what I was watching here, I just closed the position out when I didn't get my target filled. I had my target just into the low, and the reason I did this is because we see this spike down, we see the imbalance start, and you can see here the real end of auction sort of single prints here on the excess. So we had a very key excess at the top, and we had very key excess at the bottom. So as soon as I see this excess coming in, and I start to see some orders getting loaded up on, I'll just try to find it here. Let me just double check. So it's just here. So you can see this flush here, and you can see the very low volume prints into that first IB extension, and you can see the delta divergence coming into the market here. And we'd already put in a 12.5 point range on a day, so there was no reason to continue to push this. And from what I saw with the order flow and the target area into that 5 exponential moving average, I just closed out my position. So my first trade was from here short, with ads at multiple locations, and then my second trade was from here, targeting that previous low. Obviously, like I said, as soon as I see this end of auction sort of information coming in, I just got out. I mean, we could have come up and we could have seen responsive sellers and puke back down, but there was no reason for me to push things here today. We'd already tried to come back into the weekly twice and we rejected it, and I'd already done very well in the day here, so it was just to be very calculated and just take, obviously don't get greedy, just take things logically. We couldn't break through the 5/8 exponential moving average, so I just got out for a good day like that. So that's pretty much how I tackled the S&P 500 today. I mean, there's not really too much to go into. I mean, if we look at the 240-minute candlesticks, I mean, there was potentially some good downside here, but we can see that we're starting to balance in this range now. So obviously we just have to see how we come in tomorrow, but obviously this trading range that we're in now is very important. If we break above it, or if we break above it, then I've already run through the hypothesis there, potentially back into last quarter's value. And if we break below it, then obviously we're going to see a destination trade on the current daily bracket that the range that we're seeing, and I would expect a test of the 100 exponential moving average again into that sort of 1910 area. Something I want to talk about here just very quickly is the fact that I'm just going to go through the overnight trade here. So I don't know what the S&P is going to do at the minute. I've still got a longer term sort of swing position short on my swing trading that I do. But if we look at the overnight trade here, that we basically popped down below that 100 exponential moving average, and we have this area untested here into this 1890 area. So we'll have to wait and see if this area is going to come and get cleaned up here, because obviously this got traded in overnight and they didn't trade this in the pit session. So this is going to be this is an area to watch at the minute. If we do see some selling come into the market here, then we do see that destination trade play out on the daily, like I suggested with the range that we're currently in. So just all these little bits of information, all these little bits of context are obviously what we use every day to give us an edge in the day time frame and in obviously the market overall. Do you want to quickly touch base on crude oil here? Just give me 2 seconds. Okay, so crude oil, we see quite a wild day. I mean, I didn't trade crude oil today, but I'll run through the trade locations that I was looking at. So as you can see here on the Globex session, we basically I sold this yesterday from the highs here, and I had a short-term swing onto the lows, and I got this filled here on my sort of swing trading stuff. But intraday, obviously yesterday I was out on target, as I explained yesterday in my video. But today we came in and we opened gap down, and we just basically see a horrible morning pretty much. I mean, we just did nothing. We just was in like a 40-cent range, just no buyers and sellers, and then eventually something gave and we see this flush down to the bracket low, where I got my targets filled on my short-term swing from the high to the low, and then we see this responsive buying off this current bracket. So all we're seeing is just two-way trade balance, value catching up with price here. The real important context for crude is this quarterly's value. So I mean, this quarterly value is obviously, we see this nice sell-off, and then value caught up with price, and we've been referencing this. So the expectation is if we don't come back into this quarter's value, is to break down further here and possibly test $94 a barrel. But obviously that's yet to be seen yet, and until we break out, we can't say that it's going to break out, because we just can't predict that. So, but obviously from the high time frame context, this does look like we're going to possibly break down here. And you can see the amount of volume coming into this low here, so I would expect value to lead price down here possibly. I mean, we did pop above the 5 exponential moving average yesterday, and we found high time frame sellers from the 10 EMA and the higher bracket, and we've just seen a bounce back down to the low. So if we continue to trade below the 5 EMA, again value will push price through this price through this $97 a barrel, and probably come back down to this $94 a barrel. But regards to trade locations, when I was trading this today, if I didn't get short the S&P and do the stuff I was doing on the S&P, my trade location was pretty much to sell the developer value area high on Globex here. So you can see there's these pullbacks, and there was a poor high, which obviously was not good. But with regards to the other context that we were looking at, which I'll just quickly run through. So this was just the choppy range off of the open, and then this was the pullbacks to the developing value area high. So pretty much all we're doing here is just selling that previous day's range. We put stops inside the previous day's range. I would have had stops above the 5 exponential moving average, and I just want to see rejection of yesterday's range. And you can see here that on the weekly that we just couldn't trade back into this week's developing value, and what ended up happening is value pushed price down. I mean, we did refine responsive buyers and see pretty much a mean reversion to this week's mean, but obviously here just we see this big accumulation and something had to give. So obviously anyone who was trying to buy this got stopped out here. They got flushed out, and then this big responsive buying back to this week's mean, developing mean. But again, the trade location would have been off of the Globex developing value area high with stops inside yesterday's range. And if you were lucky enough to obviously get scaled out here and you stuck with your guns with stops inside yesterday's range, there was potential to add here, and then you would see this big dump down into where we would have got our targets filled. But obviously I didn't trade this today, but this is what I was looking to do with the current market situation. But this is obviously a very, very wild move. We just see this big spike down, and then they just spanked it all the way back up to the 5 exponential moving average, all the way through today's distribution, and pretty much see a reversion to the mean here. So some awesome order flow coming in here. Very, very tricky to trade, so you have to be very careful. But as long as you trade the extremes, as I'm suggesting here, and you take the correct trade locations with stops in the correct areas, then everything should run pretty smoothly in the end. Anyway, I'm just going to leave it at that for the minute, and hope this helps. And as usual, if you do have any questions, please do not hesitate to ask.